trust has been sort of sucked out of the marketplace.
That was the most challenging event of my career and one of the most challenging periods of time in my life.
You have seen firsthand the damage Sam Bankman-Fried caused to the market.
$65 million.
Ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block, and we are joined today on the other side of the mic, longtime friend of the show, of the program, but first time that you've been on, which is pretty nuts. I mean, we first got acquainted back in 2017, right when you were sort of leaving Point 72 to start Ikigai, and obviously we've been through the slings and arrows of this market. You have seen firsthand the damage that FTX and Sam Bankman-Fried caused to the market. Almost, if you would indulge me, I could say the poster child for what sort of happened, the fallout, if you will. So, Travis, we appreciate you coming on the show, especially with the criminal trial happening this week. Maybe we can just sort of start. It's been almost a year out. What's sort of the latest update? Where do we even begin?
Yeah, so I'd say, that was the most challenging event of my career and one of the most challenging periods of time in my life. A week after FTX collapsed, my mom got really sick. And thank God she's doing fine now and has made a full recovery, but she was in the hospital for kind of 35 of the first 45 days after FTX collapsed and got real serious there a couple times, which that 1-2 punch, that was tough sledding for sure. But like, these things generally go in life, there's seasons, and eventually storm clouds roll through and there's sunshine and blue skies on the backside of that. And, I think the trend over the course of this year has certainly been in that direction. And, there's still uncertainty with exactly how things are going to play out. I think that's true for the market broadly. That's true for the FTX situation specifically. I think that's true for Ikigai to some extent specifically. But I think it's all going to work out okay. So
you had about the majority of the firm's funds on FTX at the time of the implosion.
$65 million.
$65 million. So what are the next steps? We kind of talked about it at the time, but maybe just for listeners who are interested in what a process looks like for a firm that has to navigate that type of counterparty risk gone wrong.
Yes, this is the first time I've had experience in a bankruptcy and learned a lot about bankruptcy, for better or for worse. So, hopefully don't have to put that knowledge base to use again anytime soon. But I have learned a lot about bankruptcy and have been very focused on this bankruptcy process. And there's been, crypto, we have a tendency to be collaborative and communicative. And so when FTX happened, creditors very quickly became collaborative and communicative, and there's been high quality information flow going on since the very, very beginning, which has been helpful. And the bankruptcy, I would say overall, has been going better than expected. You could certainly nitpick for things that aren't going as well. A lot of people have been talking about the fees that the debtors are charging, Sullivan and Cromwell, John Ray, Alvarez and Marsal, all these guys. It is, I think, on pace to be the most expensive bankruptcy in U.S. history. I don't know what the exact run rate is right now, but earlier this year, they were doing about $1.5 million a day in fees, which is a pretty tough pill to swallow, obviously. But if you'd asked me at the very beginning of this, is this going to be one of the most expensive bankruptcies of all time? I think my base case would have been yes. And expected recoveries from the bankruptcy have certainly been trending in a much more positive direction than we would have assumed.
What did we think in the beginning? Like it was going to be, I mean, maybe this is just the fog of war at the time that kind of painted a more dramatic picture of the situation. You know, most people just thought they'd get 10%, if not nothing. Now it's looking, I mean, I think the assets that we found under the couches over there at FTX amount to something like 60-70%. It seems like creditors will sort of be able to get back. Is that the math?
Yeah. So the first bid that I saw, which was right before Thanksgiving, you know, there's a claims market. There's a very active claims market. There's a whole little corner of traditional finance that all they do is go from bankruptcy to bankruptcy and buy claims and try and get back more distributions than what they paid in claims, right? This is the whole thing. This is one of the biggest bankruptcies in the history of the United States. This is a very active claims market that's going on right now. First bid that we saw right before Thanksgiving, 6 cents on the dollar. You got $100 stuck, you get 6 cents back. Claims are now in the low 40s right now. And that number for clean claims that don't have customer clawback preferences, and maybe we can talk about that in a second. And that number's moving higher. And that's been due to a number of different things. They have just found more assets. Anthropic has made a big difference. Sam put $500 million into the Series B of Anthropic AI. This is a competitor to ChatGPT, LLM called Claude. Some people say Claude's, better than OpenAI, than ChatGPT for some stuff. And Google put $300 million into Anthropic in February this year. And then AWS just came along last year and put at least $1.25 billion and potentially up to $4 billion of total investment into Anthropic, which that in and of itself is incredible. There's, to my knowledge, there's never been a company that has received that magnitude of investment from both Google and Amazon, which I think just that in and of itself is pretty cool. And the FTX bankruptcy estate owns a lot of that. And so guys that are paying low 40s today are expecting, I think there is a safe base case to kind of 65-ish, in between 60 and 70 cents. And then there's multiple avenues of upside from there without giving any consideration to FTX 2.0. And it's my understanding that claims buyers today are really assigning no value to FTX 2.0 right now. So I'd say everything that happens with 2.0, to the extent that goes forward, would be icing on the cake.
And what do you think, what do you make of the FTX 2.0 move? Is this something that you think has legs or potentially not?
So it's not a short putt. I don't want to tell people it's a short putt or make it seem like it's a short putt, but it is doable. And the bankruptcy estate is running an auction. They will pick a winning bidder for that auction. That will probably be public in November. And they will carve out the exchange assets, basically a code base and a customer list. And then the winning bidder will use some mechanism, TBD on details, to try and turn creditors of FTX into stakeholders of FTX 2.0. And there's kind of different ways you can do that. And there's kind of different levers that the bankruptcy estate can pull to try and set FTX 2.0 up for success, to a greater or lesser degree. And there's trade-offs that happen with that. And one example would be like, as you're distributing out funds back to creditors, you can mail checks, you can send out checks in the mail to people and mail them, or you could have people receive USDC on FTX 2.0. That would be like an example, right? And everybody had to go through a full KYC process to file their claim in the bankruptcy anyways. So people, entities are KYC'd on this thing. That would be an example. Maybe a further example would be like, instead of selling the Solana, the FTX estate has a big chunk of Solana that they're sitting on, some unlocked, some locked. Instead of selling the Solana, what if you distributed it in kind onto FTX 2.0, for example? I'm not saying that's going to happen, but there's different levers that you can pull like that. And then you can go even further than that. There's been conversations around tokenizing the venture portfolio, the FTX estate. That would be like this really interesting, like imagine you could get exposure to Anthropic through an Anthropic token and you let that thing trade. That would be a very unique asset that's not available anywhere else, right? And, you can't off this. That's obviously a security. So you got to have the right KYC around, all of that. But that would be another example that you could do, that if you did that, then the likelihood that the FTX 2.0 would get further traction would be higher and not lower. So all that is still up in the air. It's all kind of TBD, but some restart of the exchange is going to be attempted. And, I think it's a great opportunity. I think there's the potential for creditors to be turned into stakeholders and customers. And then you combine that and what that gives you in terms of beating the cold start problem, right? The customer acquisition cost problem that all crypto exchanges face. It's why crypto exchanges spend so much money on customer acquisitions. You see them plastered all over F1 and UFC and Super Bowl ads and sporting arenas and all this kind of stuff, right? Customer acquisitions is very important. Well, you have the opportunity with FTX 2.0 to have tens of thousands, potentially hundreds of thousands of customers, including guys that do a lot of volume. We did a lot of volume on FTX, guys like us that could come in, do a lot of volume. Liquidity begets liquidity. And there's the potential for something to work out really well there that could drive additional recoveries for creditors, and that would be a good thing. And then the last thing I would say on FTX 2.0 is you would also have to just look at the competitive landscape of the offshore crypto market. And what do you think about trying to go in and compete in that competitive landscape? Well, when I look at that landscape, it looks like a place that I would love to try and compete. The number one dominant player in the offshore crypto exchange landscape is in a category 5 shitstorm with Binance. These guys are in trouble with every major regulator on planet Earth, and every payment processor and credit card company is racing to see who can deplatform the fastest.
I mean, that Wall Street Journal article was just insane.
That's right.
You saw basically every high profile executive leave the firm. There's obviously the rumor, or rather the reporting around massive DOJ fine. The rumor mill is kind of swirling with different things about whether or not CZ might have to step down or whether he's going to step down. How do you navigate as an investor a lot of the uncertainty, and then also ensure that you don't have sort of biases from what happened around FTX, sort of that might color or shape your thinking when it comes to other venues out there, namely Binance, but also, of course, Huobi, which you've tweeted about. I guess to play devil's advocate, some people might think, well, you got really burned, so that might translate into you thinking that there are other shoes that might drop. But you have strong conviction around there being a lot more going on under the surface that could be insidious and akin, maybe not. Well, let's start there. What do you think might be going on under the hood of a Binance or a Huobi, and what would that mean for the market?
Probably need to do another podcast on that, Frank. To be honest with you, I mean, I think we should do a whole nother episode on that if you want to. I did one with Tom Shaughnessy at Delphi a few weeks ago. If I was going to try and give you a soundbite on it, I think you can go to my Twitter account. My pinned tweet is a list of factual events that have happened with Binance since December of last year. It's not a list of conjecture. It's just a list of factual events. And you can look at that list and you can decide what you think about that situation. And I think that's the best way to kind of sum it up. There's layers of conjecture that I can add on top of that. The vantage point from which I come to it was in the wake of the FTX collapse. And you look at the Binance situation and you say, well, if Sam did this with FTX, what is the likelihood that Changpeng might be doing something similar with Binance? And that likelihood just seemed much too high to me to stand by and say nothing. And so in the second week of December of last year, I wrote a tweet thread that went pretty viral, publicly warning about the risks around Binance for the first time. And then it has just been all downhill for Binance month after month since then. So my original views have been entirely vindicated. So this idea that like I'm coming at Binance from some perspective that is not warranted by the set of facts that are in place there, that's nonsense. That's not the world we're living in.
So what do you do as a trader or a fund if there's the trust has been sort of sucked out of the marketplace? Where do you go, and what sort of parameters need to be in place now in hindsight for you to trust a given venue?
Certainly a greater level of transparency than what we have ever gotten from Changpeng Zhao. You look at the body of actions that we get from him, not just over the last year, but just over the entirety of Binance. Their proof of reserves is completely fugazi. You know that. It's entirely fake news. The customer deposits number is fake news, and they don't sign their wallets. A lot of these wallets they claim to be theirs. There's no proof that they're actually in control of a number of these wallets. So DeFi Llama throws up some $55 billion number. That's completely unsubstantiated. This is the single most important person and the single most important entity in crypto. That's not hyperbolic. That is unequivocal fact. And we just deserve a higher level of transparency than what we get. Frank, you and I kind of got into this more or less around the same time. We have poured, think about how much you and I have sacrificed for the sake of this ecosystem. We have poured blood, sweat, tears, sacrificed all kinds of shit for the sake of this ecosystem. We deserve collectively a higher level of transparency than what we have gotten from the most important person and the most important entity.
Yeah, it's a bit disconcerting. Sometimes when people raise claims about, very obvious things, just people leaving the firm, the lawyers, and responding to it so flippantly, it would be easy to come up with an actual defense of the situation or to truly address it in mature way. This isn't like he doesn't run a restaurant or like a playground. This is like an actual marketplace where people have their livelihoods at stake.
A really big one.
Yeah. And so what do you think about in terms of what will happen next? What are you looking at for the case? What type of information are you interested to see? What are you going to be paying attention to as the criminal trial unfolds for SBF?
Well, I just hope that justice is done. We've got a judicial system in the United States that usually works, not all the time. You hope it works. And I'm hoping it's going to work this time. And if he committed crimes, he's going to be convicted of those crimes. And then he's going to get whatever punishment our judicial system deems necessary for those crimes. And if he didn't commit crimes, then I guess he's not going to go to jail.
Did you check out the Michael Lewis interview? How much did that tick you off? There was he basically said that it was a money-making business, and that had it not been for CZ, alluding to him at least, casting aspersions about the business, probably would still exist today.
Right.
Which is pretty nonsensical. Let's wrap up with sort of your macro outlook. Obviously, macro is likely in the driver's seat for crypto and all assets, with the U.S. Federal Reserve basically saying they're going to keep rates steady, likely hike in a year. What does that mean for crypto, and how do you play this?
I think macro has mattered less for crypto over the course of 2023 than it had over prior years. That may change as we move into 2024 and get some of these idiosyncratic issues behind us. We're still not quite there yet.
So if macro hasn't been in charge or leading the market, what has? Regulatory dramas?
Yeah. Bitcoin's up 60 something percent, 70 some percent year to date. And I think most of that was just a bounce off of deeply oversold levels.
Yeah.
And also supportive from macro broadly, but we're just still dealing with a lot of idiosyncratic stuff, including positive things. The spot Bitcoin ETF is the number one most important bullish idiosyncratic factor. And then I think what happens with Binance and Justin Sun and Huobi and TUSD and all this stuff is the number one most important idiosyncratic, negative situation that still needs to play out.
Well, once we wade through this week and just get through it, get through the trial, we'll have you back on to talk about your concerns around Huobi, Binance, et al. Appreciate you taking the time to come on the program. We're going to have you back on soon. Travis Kling, thank you so much.
Thanks, Frank.
Appreciate it. And the Scoop will be back for you again with another great guest. Have an awesome day. Be safe out there.